What's up, everybody? Dave Bartosiak, and I'm back with another chart of the day. I think as you're perusing through YouTube and various financial websites also, you're going to see a lot, I mean a lot, about NVIDIA's conference today, the GTC conference. Now, one of the major presentations, we're going to have the keynote from Jensen that's actually probably going to be up before this video gets out. So we'll see what the impact is then. But you're going to hear a lot about NVIDIA, but you're also going to hear a ton about quantum computing. So I wanted to touch on one of these companies, D-Wave Quantum, ticker QBTS. Now, big shout out to Kevin Cook over here, who uncovered this bad boy back in September of 2024, when this stock was under $1. And boy, what a ride it's been for this. Just zooming in here since about September. Oh, I think it's October or September. And you can see this crazy ride, a huge push higher, skyrocketing, going parabolic. Then you have this nasty gap down. And we talk a lot about the gaps getting filled. Of course, when you're the poor guy who bought the highs on that the day before the gap, you could feel like the whole world is ending, right? Because it just seems like you're never going to get there. So the first move here takes it down to the 50-day moving average, which is incredible when you think about it. I mean, a stock that literally went 10x has its first big gap down and manages to find some support at the 50-day moving average. That's pretty astounding, but it did. And even with this intraday dip down, we do see this a lot, where you see a stock come to support, they force it under. I call it the stop grabber, because what's happening is they're forcing this market lower, and a lot of these stop losses are being triggered underneath that support level. And then inevitably the next day, up, we're higher. And we see that happen a lot. But it wasn't an easy move to get back to fill that gap. I mean, the volatility here is pretty astounding. This thing whips around a lot. You're talking about going from 822 all the way back down to 445. And that's just from February 21st to March 4th. So the thing really moves around a lot. But there's two sides to that equation, right? And the other side is when things get hot, they get hot. And recently, my friends, it has been scorching. So you see these lows here, March 10th of 449. And then you have marching higher nearly every day. We're intraday here on March 18th. So it remains to be seen how the fallout from this conference is. But take note of the volume. So when this was sort of in this relative obscurity, when it was single digits, really $1, this volume was nothing. A couple million, 2 million, 4 million. And then it starts to ramp up a little bit. You see some 10 million days, 20 million days. And as it gains in popularity, you get some of these really big spikes, 200 million shares traded, right? And then the hype kind of settles down a little bit, and we're trading in, 45 million shares. And now look at this explosion of volume, 39.85, 72, 130, 261. So just huge change in volume, which can tell you that, hey, this is on the radar now. There's other people talking about this. It has been found. And part of the reason is the breakthroughs that they've made on the quantum side of things. So everything's moving in the right direction right now, but you know that there's a ton of volatility in this name because you've seen it play out before. So what you have to ask yourself, is this another one of those stocks that spikes and then spends the rest of the time dipping lower? Give me another spike, then it's going to dip lower again. You're not sure. So how can you be sure? Well, unfortunately, my crystal ball is broken, so we can't. But one thing to keep in mind is, how did this stock interact with the 50-day the last time it came down there? And you'll notice that it did, like I said before, catch that buy, catch us a sell here. It's a wider range around the 50-day, but it's still respecting that level. Okay. So I know it's really fun to get up in here and chase these things. So people love, in the grand scheme of things, if you look at the valuation on this, it's not, we're not talking about $1 trillion market cap, right? So yes, there's plenty of room for it to go higher, but I think if you want to play it safe, and that's kind of what I like to talk about here in the charts of the day, like what's really on the chart that's showing us some key support level. Of course, there's that 50-day, but we can also draw a fib and go from those lows to the recent high. And you can see that halfway is about 820. So we're a little ways off from there. We've kind of interacted with this first level, this 23.6. You've seen that earlier today and they bought that. But again, we're not out of the woods yet, right? Here we are intraday. We don't know 100% what's going to happen. But some key levels to keep an eye on. So the 38.2 is a little over 9. Then you got the 50. And then the 61.8 is at 733. It'll change. 730 and change. And again, you can get really granular on this. So you take this March 10th low, 449. And if you double click, or actually just hit this, that makes it easier. We can make this perfect. So not 448, we'll make it 449. It's exactly what the high is of 1195. There you go. So we're up by 2 cents. So now this will give you the real deal numbers. They didn't change too much because we're pretty close there. So 910 on the 38.2, 1019 on the 23.6, 822 on the 50, and 734. So then a note on this 734, I'm going to go ahead and get this fib out of the way, is that we do have another gap up. So that could attract price action if the stock does roll over. Again, we have this big event happening. How many times have you seen it? We're buying all the hype into the event comes, it's a little bit of a letdown, and these things, retreat. So the bottom of that gap is the March 13th high at 712. So for me, if I'm looking more at making a long-term entry, I'd be waiting for a retrace close to the top of that gap. We got the 50-day down here as well. So depending on when it happens, that'd be one way to do it. Chasing this, if you're going to chase a breakout, this is not the anatomy of it. At least it's not so far. So here's our previous high, 1141. Let's keep that high in mind, 1141. So we got above it yesterday, okay? And it was on decent volume, 210 million shares traded, and the stock got above that level intraday. We did not close above that level, and then so far today, there hasn't been any follow-through. For this to be a real deal breakout, you need to get above that level, you need to close above that level, and have some volume to confirm it. So that's when you would go ahead and enter along, playing the breakout. And then your stop, you could just put on the south side of the breakout. You can use this close from yesterday, which is 1023. So if you're looking for a breakout, you would need the stock to be the close above, that previous high. And I would be using that closing level as the minimum or the closest stop loss that I would use. So just a couple ways to play it. You can wait until it breaks on down, or you could go ahead and chase a breakout. But either way, this thing moves a lot. So I think your strategy has to be more towards, something that's really going to whip around versus something that's going to be tight. I'm not expecting a range bound action on a stock like this. I'm expecting it to break higher or reverse come lower before, there's another opportunity to buy. But there you have it for my chart of the day. I'll have another one tomorrow. I'm sure it's going to be in the tech space too, because there's going to be a lot to talk about, a lot to look at here today coming out of that conference. Hopefully I'll find a name you haven't seen a bazillion times before. Try to find something a little bit more obscure that maybe you could put on your radar for the future. So for everybody here at Zacks, I'm Dave Bartosiak, and I'll see you tomorrow.